I will not beat around the bush much with this one since this is tremendous buzz around this topic already. The domain of investment banking. Our placement team already has seen a very sharp rise in the job opportunities in relation to this profile. And hence we had to conduct a session surrounding this job role and the career option that is picking up pace. The topic of interest here is Ultimate Investment Banking Career Guide. And who better than Mr. Sudarshan Ramakrishnan, the managing director of a leading investment bank, to lead this conversation? After all, he has 13 plus years of experience in investment banking, mergers and acquisitions, and building strategies. Welcome, Mr. Ramakrishnan. Thank you so much for joining us today.
Thank you, Mamta. Wish everyone a happy Republic Day. Very happy to be here again.
Wish you the same. The stage is all yours.
Thanks, everyone. What I thought I'll do is, unfortunately, I don't have slides to present, but what I thought I'll do is just structure the session just to cover kind of the what investment banking is all about, the types of skills that people would, typically need to have a successful career in investment banking, some of the domain knowledge in terms of just purely curricular knowledge that you would like to build on as you think of, building a career out here, what the different levels of roles are in the investment banking field, and what is typically demanded across the different roles. Some of the softer aspects in terms of just more personality types that we've seen who have had successful careers out here, the types of models and products that typically are outcomes of what you would do as an investment banker, and then also from a longer term perspective as you think about your career, how investment banking is almost a stepping stone towards potential other job opportunities as well. And so I thought I'll cover that. Let me start with the what. So what do investment bankers effectively do? I mean, I think to very if you were to really simplify it, the investment banker's job is an advisory job, and your role is typically to advise your clients, who are typically corporates or funds, in terms of their growth strategies. And the growth strategies could be typically twofold. One is advising them on their inorganic growth strategies, particularly around mergers and acquisitions and how they could use that as a strategy to grow. And then the second is capital raising strategies. Capital typically raised to continue to build their businesses going forward. And as you're well aware, capital raising strategies in this market can be effectively 2 to 3-fold. One is in the public markets, so companies that look to effectively IPO and go public and raise capital through that mechanism, and we advise companies on that. And then second is, and what has become a pretty big part of our current market, is capital raising strategies in the private markets. As you can see, a lot of companies in India, we have close to kind of 120 unicorns in India, of which only kind of 6 to 7 are listed right now. So there are a lot of them which continue to remain unlisted, and yet have been able to raise money to fund their growth plans. What are the skills? What do kind of what does it take for you to be a successful investment banker? I would kind of break it down into 7 skills. One, the first one, which I think is kind of a base level skill, which is obviously important, is just basic quantitative skills, being able to understand businesses, but also translating a business strategy specifically into kind of numbers and what that would mean in terms of kind of the financial profile of the company. So really being able to break that down into numbers is very important. So quantitative skills, I think, are key. Second is analytical skills, and third are problem solving skills. While you might think of them as same, I think of them as different. So analytical skills typically, whenever you're thinking about the financial profile of the company, you're typically looking at scenarios. The market environment is continuously changing. The market environment in which we were in 2021, very different from what it was in 2022, very different from what it was in 2023. There have been different variables at play when you are a company, some of which are not in your control. So, for example, the interest rate environment is not in your control, and the interest rate environment can actually impact the financial outlook of your business. So, being able to analyze what are the different scenarios of moving variables that could impact your business and how that could have an impact on your financial plan is something that investment bankers advise clients on, and it's important to do that. Another good example is oil prices. For a lot of companies, for example, oil prices are a key input variable, or wage inflation, employee unemployment, employment, and what happens in terms of employee costs is a big input variable. And so again, as you think about founders of companies and who are driving their strategies going forward, understanding what that would mean in terms of your financial plan is important. The third is problem solving. When I say problem solving, a lot of our job is in bringing people together. What I mean by that is when a company wants to acquire another company, there's always an expectation in the acquirer's eyes in terms of what the target would deliver to them and what value the target would be for them and what it could deliver to their business. And on the same side, in the target's mind, the expectations are different. The expectations in terms of what their business could add value to the acquirer, what value it could be in the hands of the acquirer, and how it could evolve could change. And so being able to almost bridge the gap between what an acquirer's expectation is versus a seller's expectation, and problem solving to make sure that they come together is very important. And when you think about a company going public as well, on the one side you have the company that's going public, and on the other side you have the investor who's looking to invest in the company. And again, there's a natural bid-ask gap, if I might say, in terms of one is kind of the valuation the company that's going public is looking to achieve versus the valuation at which the investors want to invest. And so being able to kind of bridge that gap is also important. And then also, in a differing market environment, kind of the size of the capital raise, right? Sometimes you think you're going to go out to the market raising, call it, 1,000 crores. And what you see is the market's actually appetite is a lot more. And so, does that present necessarily a different opportunity for the company to raise more capital? Or on the other hand, sometimes it's the other way around. You're going to raise 1,000 crores and the market environment, for whatever reason, is not as good. And so being able to actually problem solve with the client to make sure you meet their objectives in a constantly changing expectation environment is very important. The fourth skill is teamwork. Teamwork, I mean, is a very basic. It sounds like a soft skill, but the reality is, as an investment banker, you're effectively working very, very closely with your client. And so not only are you a part of kind of the client's team, but you're also part of the client's working team. So there's the CEO, CFO, founder at the senior levels, but then there are the finance team, the FP&A team, the tax team, legal advisors, accounting advisors, all of them who are coming together along with you and maybe other bankers. And so being able to actually work in a team is very, very important, because typically you're working on very, very crunch timelines. It's very important to kind of know your role, play your role, and ultimately kind of deliver the output to the client. The fifth point is very kind of basic, but it's very important. It's client orientation. What I mean by that is, in our business, if we don't have our clients, we don't have a business. And so ultimately, your client is always right, even if they're being unreasonable. And so being able to, and sometimes when the client is saying something, what they're saying versus what they mean is sometimes very different. And so being able to actually sift through what that really means and being able to deliver an outcome to a client is very important. So, if you're a person, you need to have high interpersonal skills to be in this business in general. But you have to have a very, very high level of service. It's a service-oriented business. And so high level of service and client orientation is important. Sixth point is commercial mindset. So, ultimately our role typically involves providing advice on the finance side of the business, which means that you have to be shrewd. You have to be completely up to date in terms of all the different variables that play in a financing environment, be it kind of valuations in the markets, be it interest rates, be it prices of all the different input variables that can change the financial outlook. So commercial mindset, again, very, very important to be a successful banker. And then seventh skill, I'd say, is negotiation. Again, as part of everything that you do, you're typically, you're trying to bring people together, which involves a lot of negotiation and being able to understand different requirements and actually being able to negotiate hard is a very important skill as a banker. Let me get into some harder skills like domain expertise. Look, what do you need to know to be a successful banker? I would put it into kind of four buckets. One is obviously finance skills. So finance, when I say finance, I mean corporate finance skills, being able to understand what a P&L, balance sheet, cash flow, etc. is, what are the different line items, how it gets impacted, how does tax play a big role, how does liabilities play a big role, what are short-term liabilities, what are long-term liabilities. So really understanding finance in a very, very high level of detail is a basic domain skill that's required as part of investment banking. Second is strategy. And I'll combine my second and third point together, strategy. And the third one is sector skills. So what I mean by that is for you to be able to advise, say, a telecom client or a technology client, typically you're talking to a CEO, CFO, founder. As an investment banker, you're never going to be able to run the business the way they run it or understand the kind of level of detail to kind of build a business the way they build it. But for you to understand the sector in detail, for you to understand the different players in the market in detail, to understand what the strategic initiatives for each of the different players in their market and how their moves could impact their business in detail is kind of really value additive to a CEO. So for example, the CEO or the founder gets up in the morning, or the CFO for that matter, they get up in the morning and they're really focused on their business. They're really focused on building their business in the best way possible. But as part of their day job, they are not necessarily always focused on, while everyone keeps a tap on competition, they don't have the nuanced pulse of what their competition's strategic priorities are, financial priorities are, how they're thinking about M&A and what moves they're making that could have an impact on their business. And so I think that's where, again, a banker, when you talk about strategy and when you talk about sector, I think because as investment bankers, we have the ability not only to have a pretty deep understanding of every player in the sector in which your client operates, as well as, what are the strategic moves. I think those are the really domain, expertise that is of value add to your client when you're giving them advice. And then the fourth point is on the regulatory and the legal side. Again, like everything that a business touches has implications from a regulatory and legal perspective. I'll give you an example. For example, I do a lot of advisory on the telecom side. The telecom sector is a licensed sector. It's very heavily regulated by the government of India in terms of the Department of Telecom, as well as what regulations are around, for example, license fee costs, spectrum costs, AGR liabilities. And so really, or if you take the e-commerce sector, for example, what are the regulations around, multi-brand retail, single brand retail, who can play, where can there be foreign ownership, where there can't be foreign ownership? Or if you take the electric vehicle space, how is the government choosing to subsidize electric vehicles? There are FAME subsidies, there's PLI subsidies, what implications those have. So the regulatory and legal framework in which your client operates. Really, you're not expected to know it as well as a lawyer does, but you need to understand how those things impact the commercial side of the business, when you're giving advice to the client. So those are kind of the domains. uh, Let me get into kind of the levels of investment banking, right? So what are the different, the investment banking is I've done this actually not 13 years, I've actually done it 19 years. And it's a career that's, it's a career that it has a pretty flat trajectory. The different levels is your entry level job in an investment bank is typically what's called an analyst level job. After 3 to 4 years of doing the analyst job, it's obviously a very hyper competitive environment, and most organizations operate on a little bit of a kind of, it's hyper competitive but also very meritocratic, but it's also a little bit of an up and out policy. So in the sense that either you're moving forward, or you kind of have to move on from that career. So after your analyst 3 to 4 years, you typically are an associate for 3 to 4 years. Then you have a bucket called the VP bucket, the vice president bucket. After vice president, there's a director bucket. After director, there's a managing director bucket. And so those are typically the different levels in the investment banking job. And the skills required to be successful at each level are different. So, when the analyst level role is a lot more to do with the hard work and in terms of understanding the quantitative side of the business. Excuse me, the quantitative side of the business, and the kind of presentation side of the business. As you become an associate and a vice president, you get into a lot more of the execution side of deal making. How to drive a transaction forward. And once you're a director and a managing director, your role, while you do all aspects of the job, your role is really in terms of client origination, transaction origination, really spending most of your time with your clients, understanding, listening, really understanding what your clients' priorities are, and then trying to be able to provide solutions to them that are of value to them, and then really handholding them through that process, right? And typically, and I'll spend a little bit time talking about this because this is kind of what I've done for at least the last 7 years. Typically spending time with your clients does not, you're typically working with a client on something that is, call it, critical path to their strategy right now. So either it is they're looking to either buy or sell their business in an M&A transaction that could be defining to them, because a client's business is effectively their baby, right? They've either founded the business or run this business for a long period of time. And so it's not just being cold-hearted about, like, are they going to make money out of the deal or not, but it's also being empathetic to their softer requirements. Sometimes being a founder of the business and being a CEO of the business matters a lot more to the client in terms of their standing in community sometimes. So it's not always got to do with just kind of the money they get, or the salary that they make out of the transaction. And so client management as a job, as I said, a lot of what you're doing is very critically important to them. Either taking the company public is critically important to them, or doing a fundraise that can change the outlook of the business is critically important to them, or buying us or selling a company which is in their sector could be critically important to them. And so a managing director job is to basically be primarily client facing and riding, and really being an advisor to the client from a longer term perspective, keeping in mind kind of, while you have a near term transaction you're advising them on, your relationship matters more than anything else. let me get into kind of some of the softer aspects of the business which are important. So one is, I think, to be an investment banker, you have to be target oriented and entrepreneurial. What I mean by that is ultimately, if you want to build a career longer term in investment banking, your ultimate goal will be to effectively, run a business. And when you run a business, you have P&L targets. And, the one thing you have to keep in mind is in our business, we don't have a product. We don't have a Nike shoe that you're selling that will sell for itself, or for that matter, any hard product that you're selling. You're effectively selling your intellect to the client and your service to the client. And so every new situation, you're starting from zero. I think the only leverage you have is your relationship with the client and your understanding of their needs and what's going on in the market. And you have to continue to give them ideas that will take their business forward. And so, being entrepreneurial, being continuously thinking about ideas for your client, and ultimately, of course, when you're running a business, you also have to be target oriented in terms of how much you're going to ultimately make in terms of revenues to be a successful investment banker. And so that's the first thing. Second thing I would say is team building. So especially for me, like, we run a team of 20. We have certain goals in mind, but being able to actually hire kind of senior investment bankers who are able to kind of own clients, own outcomes, deliver upon their targets, and still maintain the high quality of reputation that is required to be, a successful investment banker is extremely important. And so team building. Third is, I said, team orientation. When I say team orientation, it's got to do with the teamwork point that I made earlier as well. So I won't spend too much of time on that. Fourth is being able to stretch in terms of work. So I think the one thing the investment banking job is not is it's not a 9 to 5 job, right? Ours is it's a project oriented job. You typically get busy based on projects that you're doing with clients. And your clients can call you anytime, anywhere, or you might come across an idea at any time, anywhere, maybe even when you're on a holiday sometimes. And typically these things are, high priority. So it's important to be able to, like, I think of, like, if you want to make a long-term career in investment banking, I think of it more as a lifestyle than necessarily a career, which is, you're kind of, of course, you have to learn to switch off, but at some level you're always on, and you have to be able to be nimble. And it's a little bit like, how it is to work in a startup, right? You have to be outcome oriented, and if it requires, being working and being stretched when you work, then you have to do it. What type of materials do you typically deliver? If I had to break it down quite simply, what do you have to deliver to be successful as an investment banker? So one is, you need to have good kind of financial modeling skills. What I mean by that is, you have to be able to take any company that you're working with and be able to build, like, effectively at a very simple level, like an Excel model that projects out how the business is performing and how the business will perform in detail. And it could be drivers. So again, if I was to give you the example of the, telecom, and we can talk about other sectors, telecom is a sector where you start with kind of how many mobile subscribers are there in the market, what is the market share of your company, what is the ARPU that the company generates, hence what is the revenues that the company generates, how much of that goes in costs in terms of license fees, spectrum fees, operating expenses, etc., to get to profitability. And so being able to actually build out a detailed model so that you really get a detailed understanding in terms of what are the different things that drive the finance of the business is critical for you to be able to provide good advice. Second is what I would call collaterals. When I say collaterals are basically documents that are used by companies to communicate with investors or counterparties. So if you go to any listed company, you go to their website, typically they have something called investor relations. And under investor relations, they will have something called an investor presentation, which effectively tells the whole story of the business. What is the business doing in detail? These are typically, 40 page decks. Sometimes they're 120 page decks, which go into details of what what the business is doing, what's happening in the sector, what are the regulations driving it. Being able to actually articulate that in a way that is understood by investors is something that we advise companies on doing. It's something that is very important. Particularly for listed companies, it's important because they have to communicate with public market investors. But even for private companies, it's important because, that's the document that forms the basis on which you typically go out to the market to raise money, right? And so, and again, an investors meeting, call it, 100 companies in a month who are coming to raise money. They typically will invest in 5 to 10 of them. And so you'll get 1 hour of their time to be able to present your case. And so being able to effectively deliver the explanation of what your business does and why you're there to ask the investor for money and why you will make the investor a return on the money that they invest within that 1 hour is, it's critical. And so being able to communicate very, very in a lot of detail and yet very punchy is like a critical skill of a good banker. The third thing is legal documents. So, when you're in transaction document mode, when it comes to like for a acquisition transaction, there's something that's called a share purchase agreement. There's something called a shareholder agreement. There's something called an antitrust agreement. These are legal agreements, and ultimately the lawyers will document these legal agreements, but the bankers need to be able to read the fine print of every legal agreement to understand the commercial impact the legal agreement can have on their client and how the client should negotiate those legal agreements. And so being able to, go through that is very important. I gave you the examples on the M&A side. On capital raising side, typically, when it comes to an IPO, you'll see a company puts out what's called an IPO prospectus. Being able to read every disclosure, an IPO prospectus typically has the story about what the business does, but it also has things like risk factors. Risk factors are important because a company has to be able to disclose what are the risks that an investor has in investing in their business. And for whatever reason, if the risk that the company, has not disclosed comes to reality, investors have the ability to actually sue companies. And so again, being almost a gatekeeper to telling a company, listen, you have to disclose this to have fair disclosure to investors is important. So an IPO document is, for example, a very important document. And then alongside an IPO document, there are, 15 other certificates that you submit to a regulator before a company goes public, which is a due diligence certificate, which tells the regulator, as investment bankers, we've done our due diligence on this company. We're stamping this company to go to market. All of that is something that you have to be able to do. And then research, right? I think the investment bank, for you to be current in an ever-changing market, you have to allocate, call it 1 to 2 days. I do this even now, like 1 to 2 days in a week where you read a lot of research about the sectors in which your clients operate, right? It is, and that's ever evolving. Like I'm continuously learning. The beauty about this job is you get the opportunity to work. You learn with your clients. Like you get a chance to work with a lot of clients who are working in a lot of exciting industries. And as part of that, you're learning, but you also have to continue to do your homework because otherwise you're not going to be relevant to your client. And then look, last, I would say in terms of longer term, like as you think about investment banking as a profession, what can it open out doors to? Again, I've done this for 19 years. I've not seen people typically be investment bankers for all their life. I don't know whether investment banking is necessarily a career. It's not a 45-year career. It's typically a career for a certain amount of time, and it leads you on to doing other things. What I've typically seen is after a certain point in time, investment bankers typically do, one of three things. One is they get into the investing side of the business. Given again, a lot of what we do effectively as a financial element to it, but we are on the service side of the business where we are giving advice, and we are servicing clients. The natural adjacency is to say, I'll do something similar to what investment banking does, but instead of servicing clients, I will actually invest clients' money and take risk, right? And so that could be a natural kind of progression from being a banker to kind of becoming an investor. So I think that's one of the second is I've seen investment bankers become founders, right? They just, after a point in time, feel like they have garnered a good enough network to be effective business people. They've always dealt on, over time, they may have dealt on particular sectors in detail. So they feel like I have the ability or the confidence to kind of work in a particular sector. Third is our business is a very outcome oriented business. Again, investment bankers typically only get paid by the clients if the deal gets done. And so that go getting mentality of saying, karna hi hai, getting the stuff done is like a very founder mindset mentality, very outcome oriented, right? And so that helps translate into kind of, becoming, those are the skills. I don't think all skills I'm not saying all investment bankers can become good founders. That's definitely not the case. But there are a lot of skills that you pick up along the way of building a career in investment banking that can help you as a founder. I mean, if anyone has read the book Doglapan, that Ashneer Grover was an investment banker before he became a founder. He talks a lot about some of the skills that have translated well. So maybe that's my 10-minute articulation won't do justice, but you can read that book to get a sense. And then third is like a corporate job. I think again, typically a corporate job on the finance side is a natural transition as well. I've seen a lot of my colleagues, move on to the corporate side, either in strategy roles or in finance roles. They ultimately obviously, hope to become kind of leaders in their businesses, but that is typically a natural next step in terms of the career. I think I ran through what I wanted to talk about. I'm happy to stop there and take any questions. Mamta, I'll be guided by you.
Sure, there are so many questions here in chat, as you can see. So, yeah. So, somebody from the audience wanted to know, how can I get started in a career in investment banking?
Yeah, so I'll tell you. So I think getting started in a career in investment. So typically what I've seen is the following. So one is there are typically two paths I've seen. One is the path which I followed, which is, do an MBA, typically do an MBA with some sort of finance orientation, right? And then I think your skill set allows you to get into then typically all the investment bankers will come to campuses to hire you. I think that's one option. I think the other option I've seen is without an MBA is people do internships either once they've completed their CA or they've completed maybe their engineering, they started working in kind of the back office of one of these investment banks. So you kind of either do an internship role or you start working in the back office. Look, the back office of investment banks, actually the work is very, very high quality. It's an amazing training ground for, I have, a lot of people in my team have started their careers there. It's been an amazing training ground to build a career in banking. And you also come with a certain level of hunger and, you're not necessarily entitled. So that helps. So I think those are the typical paths I've seen people follow. But you need to have some bias towards finance, either BCom, or then CA, or then ultimately an MBA. I think those are the prerequisites typically to be a good banker.
Sure. I have a question from Soma Hariprasad. Can you please share some common Q&As for investment banking aspirants in an analyst's position?
Yeah, I mean, the types of questions that I ask them. Yeah. So, look, I think typically for an analyst position, you will get asked questions like, what's your favorite sector? Like, or name your top 5 stocks, right? Why do you like those stocks? based on which stock you like, then, how do you think about kind of the business? Like if I was to tell you to build a financial model for that company, tell me I don't want the answer, but just tell me the steps of how you would break down the different drivers for the business and think about building the business for the company. How would you look to value the company? What are the different methodologies you would use to, value those businesses? What is WACC? What is weighted average cost of capital? Uh, you know, what is enterprise value of a company? What is equity value of a company? So basic finance, like basic corporate finance questions is the hard questions that you get asked as an in an analyst interview. And then you would typically get asked the softer questions in terms of why do you want to do investment banking? Everyone says they want to do investment banking. Do you really want to do investment banking? Like, what have you done outside your studies that makes me believe that, hey, you thought investment banking was an interesting career? There could be, sometimes we can try to just, stress people in interviews more just to test their reaction. I'm not necessarily like we don't get thrilled out of doing it, but it's just to test someone's readiness in terms of how they would react to, being put under stress. So, and then, what are your interests outside? I do definitely look at also academic performance, because I think that it's not that we want you to be, look, I wasn't great in terms of my academics. Okay. So I'm not necessarily saying that academic performance necessarily translates in the real world well, but a consistent performer over time tells me that their ability to work hard has always been successful. And that I think is a critical role. Sometimes, investment banking is not a job. It's not a rocket scientist job. It's not a job where I'm looking for the person who's going to make the next chat GBT, right? You're not an AI engineer. I'm not suggesting in any way that you're intelligent, but it is a mindset job. It's a work ethic job. And so really testing someone's work ethic is critical, being able to read it. So academics important, and also what they do outside work. Because look, I think the job can be very demanding, but you also want the person to have, like, ultimately, if you want to become a client person, you need to be someone who's interesting for people to speak to. You can't just be, like a person who has not unidimensional, like one-sided. So understanding people's hobbies, that's very interesting, because the diversity of the person also tells me kind of the longevity in terms of this career. So that those are the kind of questions I ask.
Perfect. The next question we have is from Fareen Khan. How do you stay informed about the investment banking trends and the current market conditions?
Yeah, so a few things. So one is read the newspaper, right? I would say that, like, I think that if you pick up, like if you just picked up today's Economic Times, there's articles that span what's happening in different sectors, right? There could be, the technology sector, it could be the EV sector, it could be the telecom sector. So, reading the newspaper is kind of a underestimated, skill. So that's one. Second is there's a lot of good content nowadays that is being put out, either on, like, on sectors, right? So for example, Mary Meeker, who's queen of the internet, puts out a top internet trends presentation every year, right? Picking up and reading that is very interesting. Okay. I mean, I work for Goldman Sachs. Goldman Sachs puts out a podcast called Top of the Minds podcast, right? It just talks about, like, different trends. Very interesting, right? So in fact, when I started my career, access to this type of information wasn't there. Today, between all the VC funds, investment banks, thought, economist, for example, there's enough for you to just read about kind of what's happening in the business environment in India for you to be, relevant. So Yeah.
Great. And then we have Tripti Puri, who wants to know what is the kind of package that you get as an IBO in a corporate sector as a fresher.
I mean, look, I think this sector is well paid. So, I would say that I don't know specific. I mean, honestly, I'm not best positioned to comment on specifics, but you will get, like, if you just go search the internet, you'll get a sense in terms of, what people get paid in terms of their entry level roles. That would differ. I think pre-MBA, post-MBA, I think there'll definitely be a difference in terms of career trajectory. But I would think that from a compensation perspective, will be competitive. Obviously, the startup world has been a huge kind of boost over the last few years compared to a lot of sectors. But in a weird way, while investment banking is a cyclical business as well, it's actually a lot. Sometimes you can argue it's a more mature business than a lot of the new age businesses that have been set out, and so there is some stability in some weird way in this sector as well. It's just not a sector that hires big numbers. It's never going to be the IT services sector which hires big numbers. It's a small, niche kind of consulting job at some level. So that makes it competitive. I'm sorry I couldn't answer your question specifically, but I don't have the number at the top of my head in terms of how much they make, but you'll make enough.
I think that helps. We have a very interesting question from Sobha again. He would like to know your opinion on opportunities in a kind of recession economy for investment banking professionals.
Yeah, I mean, look, so I think, in a cyclical business, obviously the hiring trends are slowing down, which is pretty much in like our business, the investment banking business correlates with GDP growth, right? So when GDP growth is strong, you typically hire. When markets are strong, you're hiring. When markets are less strong, you're right sizing. I think that's pretty much consistent. However, I would say the investment banking market in India is growing, right? And including ours, I think every investment bank in India will look to hire over time. But I think right now, obviously, I think everyone's just a little careful because, look, I think we are driven by our clients, right? And when our clients, if you see all your clients kind of downsizing, clearly it's a sign in terms of what that means in terms of their businesses. When your clients' businesses are growing, you're typically growing. When your clients' businesses are slowing down, right? Whether you like it or not, like your role doesn't necessarily change because you have to keep giving advice, but it just takes that much longer for a company to go public or raise money. And, ours is an outcome oriented job. So, I mean, I'd say that, look, again, I think we are hiring, but it's going to be slower than in the last few years.
Absolutely. And then we have a question from Migom Pegu, who would like to know if you can share some details about EV investments in India and if you would have some values to share.
I mean, so the EV industry in India is definitely, I think the outlook is very strong right now, right? And the growth in the sector across the two-wheeler market as well as the four-wheeler market has been very, very strong. I think the government also is keen to see this sector grow, which is one of the reasons why they've set up all these subsidies for the sector. And I think with India, we are just starting. We're literally starting in terms of the long-term growth in this sector. Companies have attracted a lot of capital as part of that, right? So, I think obviously companies like Ola have raised money. I think the Tatas have raised money. I think there was it Mahindra? I think there was Mahindra that's raised money as well. So I'd say, look, I think and I don't know whether the valuations are public, but I think Tata said that they had raised money at like $10 billion or $9 billion for its Tata Motors EV business. I think Ola raised a couple of years ago, even, when it was pre-revenue at 5 billion. Now, they've sold 150,000 vehicles. So it'll be interesting to see where their valuation goes. So, yeah, definitely an area people are interested in investing in.
Absolutely. And we have a question from Akshara Krishnan. Do CFAs have a good career option in investment banking? And if yes, is it mandatory to combine it with MBA, or CFA alone would be okay?
I think CFAs, what I've seen is they do. So answers they do. What I've seen typically CFAs are successful at is so investment banking, when I talk about investment banking, all the stuff I've covered has been on the advisory side. Investment banking also has research analysts who are on the other side of the Chinese wall. So I sit on one side of the Chinese wall, research analysts sit on the other side. They're the ones who track stocks and provide opinions on different stocks and stuff. They typically have a CFA qualification, right? I think it's something that people look out for, particularly when they have a research analyst track. I do think that a CFA only kind of gives you a starting place in a investment banking role on the research side. I've not seen it that much on the advisory side where I sit. But, I would typically recommend doing, something alongside that, right? So CFA plus MBA probably just sets you up better from a longer term perspective. Or you could do CFA, do a starting role in a investment bank, and then, figure out longer term, right?
Makes perfect sense. The next question we have is from Ajit Kumar. He would like to know the names of some authors or books to read or refer to for aspiring investment bankers.
Yeah, sure. So, I mean, look, I'll tell you the ones which I read, some of which also makes investment banking seem like quite a controversial business. So let me give you all of them. I think Too Big to Fail was a very good one. It was written by the editor-in-chief of the New York Times called Andrew Ross Sorkin. It was about the whole kind of 2008 crash, right? The market crash, subprime mortgage market crash. So that's a good book. Second one is The Big Short. Again, it was about how basically a bunch of traders shorted the housing market in 2008, 2009. I think those are two good ones to read. Yeah, I would say those are two good ones to read. I mean, it's definitely more masala than anything because it talks about the market crash. But yeah, they're good.
I think there was also a movie based around the Big Short book, and that's also available on Netflix. If the audience is interested, you can go back today and refer to that. In fact, that'll give you a lot more insight.
Correct.
Okay. Moving to a little bit of what you do as a managing director. One question we have here is, can you discuss a particularly challenging deal you have worked on and how you've overcome the obstacles there?
I mean, I can talk about many challenging deals, and sometimes I have overcome and sometimes I haven't overcome. I mean, that's part of my job also. So, I mean, look, I think obstacles are part of the game. You're not going to do, I mean, it's just like, it doesn't even, it's just going to happen, right? Obstacles could be that, the market environment is very different, at the time at which you are trying to do the deal versus when you started to do the deal. And, typically the work that we do is long drawn out. So what the public sees is just the transaction announcement, and on the day of the transaction hits the news, whatever, but the deal making process is, call it can start, it could start 6 months before the announcement. It could have started 2 years before the announcement as well. So it's long drawn out. You're constantly problem solving. I don't view, to be a good, in the heat of the moment, you will always be emotional about it. But the reality is, to be a good investment banker, you have to be a little bit more cold-blooded about these things, because by the time you're in 19 years I have seen transactions happen in a week's time. I have worked on transactions for 2 years, which have got announced and not closed for whatever reason. Some regulatory approval has not come, they're not closed. Or I worked for 2 years on something which, one day before the announcement, the client, the deal got pulled. So there are, and I've also had situations where you worked with a client and they've just been, their expectations have been unreasonable, and despite all my best efforts, I've not been able to manage them. So yeah, I mean, I can't be too specific on a forum like this. I can try, but yeah, I mean, I'm sorry, I couldn't be more specific with my answer.
So I think it's more about dealing with the chaos when it comes and how it comes.
Yeah, I mean, look, the chaos is the reason you're there, in the sense that if everything was smooth, typically people don't need you. Like, investment bankers, like a lot of companies can raise money in smooth markets without investment bankers. It's when, it's really in kind of, so yeah, the chaos is probably one of the reasons why you can add value, actually.
Great. And we have one more question here that says, can you discuss the role of technology in investment banking and how it has impacted the industry as a whole?
Yeah, I mean, look, so I'll tell you, so technology, so broader investment banking. So actually, now that I feel the questions, so there's what I've covered. One second. So what I've covered right now is more the advisory side of the investment banking job, which is a very relationship oriented, personality oriented job, right? And so I think on the technology side, where we've leveraged technology has been on KMS systems, right? Knowledge creation, and leveraging, for example, material in a way where your time to market to a client is a lot faster. So it means you're using formats, templates, etc., which is critical. And then second is data access to information. So, your Bloomberg or your Reuters terminals, etc., in terms of kind of the quality of information that comes out, being able to leverage technology in that form, to be differentiated to the client. Now, on the non-advisory side of the business, like the trading side of the business or the equity side of the business, or for that matter, the risk-taking side of the business, or pure banking in terms of just transaction banking side of the business. Out there, the impact of technology is a lot more, because, there's been obviously, like, for example, even things like blockchain technology has just crashed, transaction banking costs and turnaround times in a material way. And so I think that these things have drastically changed that side of the business quite a bit. Yeah, I would say that.
Great. And I think we have ample time for one more question. So that would be, how do you approach risk management in your decision-making process?
Yeah, so a few things, right? Risk management for us is material, okay? Because you're like investment banker, like normally the media always paints investment bankers as blood-sucking vampires, right? The reality is we are not that. So, your reputation is very important. And so being able to draw a line on what is good business versus actually what is good business, but can be reputationally damaging, and walking away from P&L is a key part. So reputation of the client that you're working with, big risk management. Second is doing kind of KYC checks and stuff like that, because you're never going to be 100% certain till you are able to do like know your customer checks to actually know who you're dealing with. Third is like when you're in the part of the business, how much risk are you taking on as an intermediary to do the business versus what the reward is, and being able to understand how you can sell the risk that you're taking on and what impact that would have to your PNL is like a separate function on its own, right? That is a completely important point. So then there's like purely operational risk, which is, you have a kind of risk control framework to manage kind of business and operational risk. So I'm trying to answer it very simplistically, but there is a whole, like, if you think about our firm, we have like, of the 40,000 employees you have in the firm, you have obviously 8,000 people in technology, but you also have like around 5,000 to 8,000 people in risk and controls, right? And that could be controls on the commercial side, but controls on the reputational side, and then controls on operational side as well. I have
Makes
to,
sense.
Mamta, I
Sorry,
actually
yeah.
have to drop off. I have a 5 p.m. Zoom, so I was hoping I
Sure.
could wrap this up.
Not a problem. So our audience does have many questions, but in the interest of time, we'll just, email them to you. And whenever you do have the time, please, if you'll be kind enough to answer them for them. And thank you so much, Mr. Ramakrishnan. I really didn't want this session to end, but I think getting tips from someone who has been in this field for more than a decade is a great privilege for, our audience and definitely all of us. So thank you for sharing your experience and knowledge with us today. And thank you for joining us.
No, thank you. Thank you for having me here. And, good luck for the superb event, and happy Republic Day to everyone as well.
Wish you the same. Have a nice day.
Thank you.
Thank you.